Like, just the fight that him and Trump are in is crazy.
It is petty, for sure. It's ultimate pettiness, too.
I mean, it is like...
There's nothing like an old codger battle.
And that's old codger battle to the finest.
Today we're going to be talking about the man himself, Mr. Trump, and the few announcements he made over the last week. So there were talks about the $200 billion purchase or reinvestment in mortgage-backed securities. So we're going to peel back all the clickbait there and actually discuss what that means. And then the other headliner, which was banning institutional investors from purchasing single-family homes here in the U.S., and actually peel that back and decide whether or not that's really going to be beneficial as far as the housing affordability status goes.
This is the Loans Elevated Podcast, your weekly dose of market insights, financing strategies, and all things real estate. Presented by the Lassig team, a top 1% nationally ranked mortgage team.
Starting things off here, the $200 billion in mortgage-backed securities. What does that actually mean? I mean, TJ, you know what mortgage-backed securities are. Let's give the viewers.
What I think is funny, even before we dive into
listeners.
that, is in preface, we don't want to make this political one way or the other.
Right.
It's just kind of our job to talk about rates and the way they move, and it just so happens that it's really intertwined with politics right now. So it's just the nature of the beast.
Way more than it's ever been.
Yeah.
Well, yeah, for sure.
Which unfortunately
crazy.
makes me have to watch politics more than I really want to.
Yeah.
But hey, it makes it fun. But what I also find interesting is Trump says that or makes a tweet, and markets immediately react to a tweet,
right?
Which is now the new way or the new way of getting news and headlines, which then markets react to. I think over just last week we saw rates improve by over a quarter of a point,
eighth to a quarter.
Yeah, which is interesting to say the least,
and really based off of speculation in a way, because it wasn't like Trump had come out and started this reinvestment from Fannie and Freddie into buying $200 billion in mortgage-backed securities. It was just a simple tweet,
a statement stating that we need to do that. He wasn't even demanding saying it has to, like that he has any power to make it happen overnight with a snap of his finger.
Well, and that's what we always talk about. Is this really? There's not one lever that you pull to control mortgage rates. Yeah. There's like 4 or 5 and sometimes more, depending on the dynamics of the economy we're in and who's in office. There's just so many different variables.
Well, and it's almost like you have to pull them in a sequential order in order for it to react the way you want it to react.
Well, and there are major drivers that we've talked about, and that's inflation, speculation, right? How inflation's going to move, and then the job market. That's been the biggest thing that the Fed's been looking at, and ultimately the markets have been trading off of over the last 3 years. But there's things that come out of left field like this that, you know, when our clients ask us, what are rates going to do? I mean, we can make accurate projections, and we follow economists. And I think we've been near the mark plenty times, but we can't control these types of situations that come up and ultimately move rates up or down.
Do you have the tweet in front of you? Can you read it off?
I don't have it in front of me.
One thing real quick, I was doing some research as you guys were talking. So annual MBS issuance, which is new loans originated that need to be secured by a mortgage-backed security, is just under $2 trillion. So it's like 1.8 to 1.9 trillion is the estimate, is the approximate 2025. So if 2026 looks the same, that number, I hadn't even thought about this because I just basically was waiting for this podcast for us to talk about it. But that means that $200 billion in purchases is a pretty material number. That's 10% of the total. It's more than 10% of the total issuance that we'll see in 2026. Like, imagine that somebody came in and bought 10% of Apple stock.
I would move the market quite a bit,
significantly, right? So that's pretty crazy. That, because you see a lot of the reactions on social media and on the news and stuff, and there's differing. I mean, clearly the market took it well because they probably understood what I'm saying right now, and that's what they're paid to do, is to understand that stuff at a flip of a hat. But there's a lot of people saying like it's not that big of a deal, or one purchase of a tranche of mortgage-backed securities is not that significant. And if they do it in a way where they're purchasing only new issuance, they're basically going to flood the market with this demand for a year and say they tranche it. I can't imagine it's just one tranche of $200 billion, but it's probably like, let's buy 10% of the market every month or something like that, which is a big deal.
Yeah, that would be a big deal.
Because it's going to create some serious demand.
So I think maybe we get any further, we should probably just explain to the listeners what a mortgage-backed security is and why that influences mortgage rates. We just watched a video together this morning that explained it really well. Bach, maybe give it a quick...
Maybe you share on it because I didn't even finish the video.
Okay. So essentially, it's like any supply and demand in any market. A mortgage-backed security, as the cost of anything, as demand increases, or in this sense, if Trump artificially increases demand and starts buying these mortgage-backed securities, the cost of these bonds are going to go up, and the yields that they pay are going to come down. The yields dropping is what will drop mortgage rates, just like the 10-year Treasury. As the cost of that goes up, the yield comes down, and vice versa. If the cost goes down, they're trying to spark demand, the price of it comes down, and the yield of return goes up. So that's really how it's impacting mortgage rates, is really supply and demand. So if this is artificially going to be purchased by $200 billion, that's how we're discussing how rates could improve, and by a significant amount, especially if it's a reoccurring purchase that's reinvested into the mortgage-backed security market annually or quarterly, or however it ends up shaking out.
Is, yeah.
You know what the funny thing is? This is just a quick little side note. We talk about these loan level pricing adjustments, these risk adjustments that they created in 2023. You wonder if all these profits that they're talking about are really coming from these loan level pricing adjustments. Which
the agencies have been mega profitable for years.
Isn't that a bit counterintuitive though? They're like, we're going to charge you more to get these rates, but then we're going to give these profits back to lower rates. It's like, why not just remove
it's almost kind of like, it's crazy. And I don't know that it's good or bad. I'd have to maybe think through this and gather an opinion, but it's almost kind of like what the Fed is doing. The Fed has an ability to pull various levers to impact the overall economy, primarily prices of goods and employment. They have tools to impact that. Well, do the agencies have so much profit and strategy backed behind that profit that they can invest in, and that's a lever they can pull now to just directly impact the housing market.
Yeah.
And even if they become frankly, any business, if they're large enough and have enough capital, has the ability to influence any other business that they want. So this part actually could just be dislocated from politics altogether. Because let's say Fannie Mae and Freddie Mac became private entities and they weren't part of the government. It's probably unlikely. There's going to be some sort of thread that keeps them connected because the government's going to profit on their ongoing success because of the parachute that the government gave them for so long. But they could do that as a private entity just the same.
Yeah.
And it's crazy because if they invest in that, there's going to be more issuance of mortgages and they're going to make more money. So why would they not? I
know. Yeah, it's a good investment for them, and it's a great outcome for Americans. You really try and think about it like this. Like you talk about ways that the administration could actually directly impact housing and make it more affordable. This is one of those ways. In a sense, it's kind of like QE, but it's generating profits. It's not just using a money printer to reinvest, right?
Inflation.
It's not. Yeah, exactly. I think that's the big difference here. Is it's not just running the printer and then artificially throwing that in the markets. This is like using real profits that have been essentially washed in the economy.
This is like capitalist free market dynamics.
Yeah.
Having an influence on regular United States of American households.
Exactly.
Well,
like this could actually impact.
The levers pulled, because this is just coming off the heels of the Fed stopping QT and doing some form of liquidity adjustment. Now they're not calling it QE, but if you have that along with this tweet now, that's two levers pointed in rates' favor. Which
could be a good thing, honestly. Like people are freaking out, and rightfully so. Like I don't quite know how I feel about how big of a heavy fist Trump is using in all different facets politically. It's sometimes I'm like, it might be an overreach. And
For sure.
oftentimes, like, I'm a fan of what he does, but I try to be pretty objective with it all. So I think that's the issue, and that's blurring the lines a little bit. But if you take the politics out of it, it's like kind of what you were just saying. This could be a good thing. Like, there could be different forces at play to help create balance in the economy. Like, in a business, I think us three together make better decisions than you making unified decisions on your own, or me making, or him making, right?
Yeah.
I mean, like, so having multiple forces at play could ultimately be a valuable thing, and maybe an evolution of the United States economy
Right.
going
So
forward.
and maybe this takes the pressure off of being so data driven for the direction of mortgage rates. Now,
Well, it takes the pressure
think
off
it-
the pinpoint of the Fed controlling everything and anything, our
that's
whole
what I'm
destiny.
trying to say. Right.
It's crazy.
Well,
Because
aren't we
and there-
fearful
there
that
are
this is,
other
like,
levers that we
artificial
could
in a way,
use.
though.
Well,
Well,
why? They have profits that are sitting
That's
on
why
the
I was.
sidelines.
I
money in
think
the
that's
bank.
the biggest difference here. That's
That's
what we
true.
were just talking about.
Yeah.
This isn't just the Fed starting the printer again and
Right.
manipulating
one-
things like they
only
have in
one
the
section,
past. This
yeah.
isn't
And this-
COVID. It's different. It's different. Like, they're using actual profit.
They're using
which
money
was-
that already exists in the system. Whereas
Exactly.
the Fed creates money, new money in the system to do the
That's
things they want to
inflationary.
do. Yeah.
So I think that's why the markets reacted so well from this.
Right. Right.
Whereas if the Fed came out and said, "Hey, we're going to start printing a bunch of money again and investing it in mortgage bonds," I don't know if
1,000 different variables you got to think about at that point now.
right. Well,
This
and
is
also
just
the
all
market. I don't know if
benefit.
the market would have clearly reacted well to that.
Right. Right.
It
They
may
not
have,
have.
rates may have gotten worse until they actually started investing the money to
Well,
offset the reactions.
just like tariffs, right? There was a bunch of questions on, like, is this going to be inflationary? Now everyone's pretty much aligned that it's unlikely inflationary, and if we do see some inflation, it's going to be very. It's just going to be a moment of a blip in the radar. It's not going to be an ongoing thing. So now tariffs are good. That same thing could have happened if the Fed did this, but now that they're spending money that's already in the economy that they have to spend, it's 100% benefit. But one other thing I was going to say that's kind of interesting as we're thinking through this topic is, like, this to me is an extreme value we get by having people in politics that are not politicians for their whole
100%
life.
pure politician, right? They have some sort of business.
I mean, the
experience
people
or
at
a
play
lot of
right
business
now,
experience.
even though there's a lot of crazy stuff and there's some questionable things happening, like, say what you will, but if you were objective with it, it's like, man, we're making some moves that regular politicians that are lifelong politicians with no experience in the real world, building businesses, deploying capital, and doing the things that are happening, that they wouldn't do that. Oftentimes, like, academics and politicians have theory, and oftentimes that theory proves true. But right now we're experiencing some things that have never been experienced before. And this is all based on real world business experience.
Mm-hmm.
This could be like a big transition in American politics, but also in economic strategy for the U.S.
And definitely housing and affordability and interest rates, which is what a lot of the listeners are really curious about. I mean, everyone is curious on the future of interest rates. This could actually be something that's effective.
100%. And let's be real, like, as a nation, are we more powerful if our citizens have a greater degree of wealth?
Mm-hmm.
I guess question mark right there.
Yeah.
Yes, we are. We are more powerful if our nation collectively has a higher degree of wealth per capita. Like, that's a measure of success and power of nations all over the world. So if we have a viable ability, like we're saying here, to not create inflation, but increase wealth of American citizens, like, this is essentially a way of taxing the rich to redistribute wealth, because they have billions
and
of
to
dollars.
get ahead, like we hiked rates first and went through that cycle first. You're just now seeing that happen in other areas like Japan, which is only going to help the American wealth over the rest of the world.
Oh, sure. Right. Yeah.
Well,
we've
no,
talked about that.
And you're right. I think we talked about the loan level pricing adjustments.
Right.
That was taxing the more qualified buyers to pay more for their rates to make borrowing costs lower for less qualified. And in the end, if that's driving up profits to even redistribute this back into the mortgage-backed security market It is a long roundabout way of
redistributing wealth.
Redistributing wealth.
Like literally, they are going to make housing more accessible for middle class and lower class Americans, because like the upper class, we know this because of our clients. Like no matter what rates have done, no matter what home prices have done, who's been buying?
They're just buying no matter what.
The big buyers, like the big wealthy clients, are buying no matter what, and they're leveraging the opportunities. They're bullying the builders to save hundreds of thousands of dollars in some cases. Like they continue to buy. Who's not buying? The middle class, the lower class. That the first-time home buyers. That's very public. First-time home buyers are now 40 years of age or older. Those are the ones that aren't buying. So this creates affordability. That affordability is asymmetrically beneficial for the younger home buyer, much more so than it is for the successful, wealthy home buyer.
Yeah.
Dramatically more.
Now, the challenge, the only negative implication that I've seen just across news feeds and social media and things like that is, what are the implications similar to, I don't think this is ever going to be as extreme as COVID, but we had what came from COVID, right? We had artificial lower interest rates, which I don't think this is the same case.
But bear in mind, we had artificial lower interest rates because the Fed turned on the printer.
Yes, I'm acknowledging that. But what came after that was rapidly increasing asset prices.
Right. That's
been the talking point of negative implications. But I don't think this is like some extreme where you drop rates 3-4% across the board and then it becomes FOMO, like panic purchasing. This is more of like a stabilized way to actually bring some affordability back and get the market back to something a little bit more normal. We just talked about it today. We're still down, at least here in Utah, we're down from a normal metric, we're down 30% as far as volume goes.
Yeah.
And we could probably say, in terms of transactions, and we could pretty much safely say that that's from a good portion of probably middle class and lower class.
So check this out.
Not purchasing.
I want to make a comment on this. I just looked some data up real quick on that point where it's supporting what you're saying, where this is more of like a logical approach to solving a gridlocked market rather than kind of a reckless approach. So there's multiple eras of QE before this, but just the COVID era, 2020 to 22, which is when the rates were just ridiculously low.
Yep.
The Fed bought, just during that period of time, it was like around 18 months or something like that, $2.7 trillion in MBS.
Oh, wow.
Yeah, that's like 15 times the amount that they're proposing to buy in 1 year in less than twice the time.
So that's what we're debunking right now. Like people are worried about the implications of what this could do for future inflation, future asset prices. Like, does this just kick the can down the road? That's always a question today, right? It seems like every solution is just a kicking of the can down the road. This seems to be like a lot more of a sustainable approach to bring some affordability back.
And maybe I'm wrong there. Maybe they didn't buy that much. That's what their total holdings equated to. So maybe it looks like maybe they bought about 1.5 trillion or something
Still,
like that.
Like
dramatically more.
Right.
Dramatically more.
A much more extreme
from
version.
2012 to 2014, they were buying 40 billion per month.
Well, and I have to take it back that was also a printed amount of money.
That's right. And
artificial.
And reverse time back 12 to 14 years ago, home prices, mortgage amounts were dramatically lower back then. So 40 billion in MBS purchases was comparatively dramatically more than 40 billion today because home prices are so much greater. The average loan amount is so much more.
Oh yeah.
So like it was a right now this is a reasonable, somewhat kind of, which is I think why some of the arguments have come up where like people are questioning, is this even beneficial for the market? I think that's why that's coming up, because it's like it's 200 billion in the grand scheme of things. Is that a big deal? But I think we answered that in the first question, which is it's almost 10. That's more than 10% of the issuance for the whole year.
Well,
that's
and then
that's a big
I think
influence.
people are forgetting the aspect of, okay, well, if that brings more transactions now, then now there's effectively more profits that go back into Fannie and Freddie, which if they continue this type of
it's a self-funding mechanism.
Right. It could go hypothetically forever.
Yeah.
In a sense.
Or they just bank profits, and when they need to pull this lever, they can.
Yeah.
And this is a new lever that no one's ever considered was able to be pulled, which is pretty cool.
Yeah, it is.
It's something that's never been done.
And I think we're just having this realization just talking
Right now.
through this right now. This was not
Going back
like,
to what you were saying about affordability in the middle and lower class being able to afford more with rates being lower, I would argue that right now is the best time for them and affordability because, at least in our local market, you're not competing with as many investors as you once were. Because the investors, they can't cash flow unless they're putting a ton of money down.
Mm-hmm. It's true.
Well,
See, but
and
I think you're thinking through a more maybe objective and strategic philosophy, whereas most first-time homebuyers are not thinking as objectively and strategically. They're thinking, rate is this, payment is this, I can't afford it. Rate is this, payment is this, I can't afford it.
Right.
You're thinking, rate is this, payment is this, I'll find a way to get strategic and leverage holistic mortgage planning like we do, and I'm going to buy it anyway because I'm making a crap ton of profit by buying the property right now.
Family friendly.
Right?
Yeah.
I mean, so
you work in the business every day, right?
No,
that's
that makes
that's
sense.
the difference.
But at the same token, like Trump's talking about also getting the large corporations, investors, but I realize that's not the people I'm talking about. I'm talking about the just the consumer that's buying.
the mom and pop investor.
Yeah, 5 to 10 properties, not hundreds of properties.
Certainly lower rates is going to bring that competition back to the table. So but
that is
it
a
gonna
delicate
solve
line
the full
for sure.
problem? I don't know.
But then we talked about, I mean,
Well,
difference-
and
the
sorry, can I
difference
just
is
say one
there.
thing? The mom and pop investor is supporting the same thing that I was just saying.
Yeah.
Mom
no,
and
you're
pop
right.
investor is not the wealthy upper class Americans. That could
No.
just be upper middle class.
That could be a
that's
middle
people
class.
trying to get ahead.
Right,
Right.
yeah.
So in the end, it's still helping the directed target.
Right.
You
I see
still
what
have
you're
to
saying.
put in the work. Like you have to get strategic. You have it's not just going to push the easy button and now everyone
That's
can
right.
afford it. That was COVID. I think that's the difference is everyone could afford a mortgage with a 1 to 2% interest rate. This is not what we're talking about here. This is a much more balanced approach.
Yeah.
Which I feel like it
Yeah, I
could be
concur.
really effective. So anyways, I mean, any other thoughts on that topic?
No, I'm more of a fan of it now than I was before we started
definitely.
this.
I was
I didn't
very
really have an
mixed.
opinion.
I was like, I saw both sides, and then as soon as we started talking about it, I'm like, this actually sounds a
Awesome.
lot better than what I thought going into this.
For sure. And I think the one thing I would say that, like, even if this is advice for us three sitting in this room, is, and I made this kind of smack talking comment to you a little bit ago, but like, let's not find ourselves in an echo chamber of opinions, either bashing an idea or promoting an idea blindly.
Yeah.
And let's objectively just analyze it. That's what we're doing right now. And suddenly this makes a lot of sense.
Right.
If you just listen to the talking heads on social media, and big media is even worse, you're going to hear a curated opinion with confirmation bias baked in to
Narrative is a
cause you
scary
to
thing, for sure.
believe it.
Yeah.
Right. So just get objective and consider it.
Check your
because-
ego at the door and
Right.
don't look into something to be right.
Exactly. Or don't watch something to prove your theory or prove, have confirmation bias. Like, consider everything. That's what we just did, and that was really powerful.
Yeah,
So, anyway.
for sure. I agree. Okay, the other thing we had noted to talk about was the proposed ban of institutional investors buying up single-family homes. I know we had just talked about the numbers on
Yeah.
this because
We pulled it
you
up.
hear this and you think, oh, that's great, right? Like that could help with affordability. You've heard of the BlackRocks, the Blackstones, whatever, right? All the different big companies who are buying up all these homes. Are they buying the homes? Yes. But are they buying them to the extent that people really think? And I think that answer's no. Like it's not a large
I'm trying to
market share
pull it
that
up.
you would
It's
think.
like, I'm pulling it up right now. I'm pretty sure it's less than 1.5% of all of the single family housing in America. Less than 1.5%. So it's like,
yes.
it's
let's
more of
see.
kind of the,
Big institutional buyer headlines, but their share of total U.S. single-family home stock is pretty small. Overall, around 1 to 3% nationally.
yeah. And I wish I would have had this because there's been several.
But what about what about condos and
See, but that's not being banned. No. Time out. Single family real estate would include
They're
a
including that.
condo of a fee simple ownership of a condo.
gotcha?
Or
But
a
that's all
townhome,
included.
or that's all included. What's not included is apartment complexes.
Gotcha.
But
Yeah.
one thing that I saw on social media that was very interesting, this was like a good contrarian view, is it's like, what is stopping these mega machines that have outrageous amounts of money and contacts and ability from just building their own inventory?
Yeah.
So it's like,
Well,
if,
I think
all right,
here's-
fine, stop me from buying it. I'm going to just build my own inventory. So guess what? I'll just write salaries to all these framers and all these plumbers, and they're going to have an endless pipeline of production. So now we're just going to take the workforce and build our stuff.
Yeah.
So it's
I
like, it
think
may
the reason
not
why
actually
they're not
have the
doing
right
that
benefit.
is because, here's what it said.
Okay.
Their activity is more concentrated in certain cities and markets. So in already established areas, big hubs, things like that, which honestly for most people is already unaffordable.
Yeah.
For most people.
Right.
It already is.
Right.
Big hubs, like you think of LA County, New York, those places have already been unaffordable for the majority of the population for much longer than before these people really or these entities or corporations really started doubling down and buying within these areas. So do I think it's cool? Yeah. I mean, I don't know if my opinion really matters on it or anyone else's for that matter. The fact is it doesn't really impact your affordability status to be able to buy a home. It's not really going to change or move the needle very much.
It's a bumper sticker.
It's a cool thing to talk about. Yeah.
Rally cry.
Yeah, exactly. I think most people, my initial reaction was like, oh, okay, that's kind of cool. Like a headed in the right direction, trying to give back to the little guy.
The biggest thing that I think about is just virtually a repeat of what I just said, but it's like, if you're dealing with sophisticated money, big money, they have hundreds of people that all they do is analyze markets. All they do is analyze deals. All they do is analyze return on investment. That's all they do. So it's like you have the smartest minds, entrepreneurial minds. If they see a roadblock, like these big companies, these big organizations aren't the biggest in the world by accident. They're the biggest in the world because they're the smartest, they're the most dynamic, they're the most entrepreneurial, and they face some sort of law, because this is not new. Like, laws change all the time that screw up big investors and big institutional companies all the time. They see a law, they're like, oh crap, how do I navigate that law? Well, we'll just do this. Perfect. Let's pivot and do that. They never stop.
Right?
And they generally they make more profit because of it, not less profit. Like, and that's the argument where it's like, is it valuable that Trump's trying to like lay a heavy fist and say, companies, large organizations can't do this? Hell no, it's not. Like, the free market will wash out all of this on its own. Once the government gets involved, that's a bad thing. Like, I am not a fan of that idea.
Yeah. I mean, any interference with any free market generally ends up, what it does is you end up developing a steep and decay shape economy, which is exactly what we're in today.
Right.
Because all it is government interference. They think it's a good idea. They don't think it all the way through. The corporations always have the means and the way to get around it. And then it actually ends up benefiting them more.
Right.
And actually making things more challenging, oftentimes, for the middle to lower class.
Like, let's look at that idea. They just take all the workforce. So they take all the labor in these areas. And now they own the labor.
And how many
now
people
they're
are
like,
out
wait
of
a minute,
jobs?
let's stop building these houses. We own the labor now. Let's just sell the labor back to the builders, and we'll just make profit on the labor. And it's
right.
There's always going to be something. So I agree, that's silly. But the other thing, going back to our first point, is legitimately leveraging the benefits and the capabilities of capitalistic free market dynamics, which with Fannie Mae and Freddie Mac investing in MBS, that is the free market at its finest.
Mm-hmm.
This is the government sticking its hand where it should not.
Yeah, I agree.
Don't tell companies what they can and can't do. That's asinine. I mean, unless it's illegal.
Yeah,
but
I think the main attempt here is to make real estate sexy again.
Oh, for sure, yeah.
Which, I think the fear and greed scale in real estate for the past 3 years has been so far tipped towards fear. They're just trying to tip that any way they can.
There's a clear effort. There's a clear effort for bringing back real
Trump's
estate
a
and
salesman.
housing. And,
He's a freaking salesman.
Well, and he knows that the major baseline of the U.S. economy is housing.
Right, right.
Yeah.
If that's
in shape, make it look better too.
Yeah, I mean, when that improves or when that performs well, everything else does too.
Right. Yeah, it's true. It does touch so much of the economy, but I think it goes to the same underlying point. So, I mean, my vote is this is a terrible idea. They shouldn't do it. But I don't even think maybe they won't. I think it's more of like a shiny object to get people excited about something Trump's doing. But it goes to the same point of like, you got to be objective. You got to be thoughtful. You can't, just because you're a Trump fan, you can't be like, oh yeah, look at what he did. Go
exactly.
Trump. Or because you're not a Trump fan,
just
talk smack on whatever the heck happens. Like, be thoughtful, because the reality is, whether you like Trump or you don't like Trump, whether your tribe likes Trump or your tribe doesn't like Trump, doesn't matter. Guess what matters? If you objectively look at what's coming your way and you navigate the opportunities and the risks and all the things, and you benefit your family and your community. Like, that's what makes a difference.
Your community a better opportunity.
Exactly.
I think that's how you need
it. And you will not have that ability if you sit and pay attention to all the talking heads, go with confirmation bias, and get in this tribe of a bunch of extreme politic freaks. Like, it's just silly.
I agree.
Well, and you shouldn't act out of fear out of any of this news either, because it's not, no changes are going to happen overnight. Some of this stuff happens and you have to let it bake a little bit.
Yep, which is a logical, objective, pragmatic approach to it. But that never happens. Like, I think that's the call to action right now, is like, don't heed the information you see at face value. Like, just get real. Think about it. And the beauty is, we've got ChatGPT and all other different types of,
so much
AI
information at your fingertips.
You can figure stuff. Like, you can just, I mean, imagine you basically have the full library and every business textbook and everything that exists at your fingertips. All you have to do is use your brain to think through it and ask the right questions and dig deeper and get curious, and you can learn. Like, we have such an opportunity right now. It's unlike any other, but we also are flooded with media unlike any other time in history too, which is crazy. Right? It's so easy to get caught up in an echo chamber or a spiral of all the same information.
Right.
But it's also so easy
I think
to find
something
the
else.
information.
So, like, this is funny. I mean, speaking of the information that we have accessible, I ran this through ChatGPT, and we've had this discussion before, so I know you guys would agree. But really, like, if we wanted to actually help housing affordability, it's a supply and demand thing. Like every market, it's supply and demand. Mm-hmm. We've been short supply-wise since the big meltdown in 2008. Yep. If you actually wanted to help with housing affordability, you would make it easier to build and make it more enticing for smaller builders to jump into the game instead of isolating it to the big name builders who are just profit driven. Mm-hmm. Right now, there would actually be more inventory hitting the markets that's affordable. And then this idea, like paired with something like this MBS purchase idea, like those together would actually give power back to a free market to be able to.
See, but here's the thing. Here's what you have to be cautious with.
Improve housing affordability.
It's true.
I think it's a better idea, I guess is what I'm saying.
But I think that whole conversation is far more nuanced than you're making it out to be just at the surface. Because I might even argue and say that these large builders, the biggest in the nation, while they make obscene amounts of profits, they have often, the ones that I've talked to behind closed doors and things, have a noble goal. They have a noble goal to get more square footage at a lower price to give more families access to housing.
Well, because they're big with the ability to scale and do so accordingly.
They have the ability to scale. I think if you talk to a small local builder, what are they doing? They're a framer, or they're a sub that's like, well, if I can make $150,000 by building one house in profit.
It's true. They're not really driven. They're not driven by inventory back to the people.
And some of these
really
just
they're not
that more so is profit driven,
solely
just profit.
Selfishly driven, right?
That's true.
So you have to be cautious because now I've been like kicked in the nuts by some cities, so I'm not a city fan either. But one thing that I commend cities for, these city workers, like, and I think us capitalistic entrepreneurs get a little bit blinded, honestly, and thank heavens we have people at the city. I think there needs to be a balance sometimes, but they look forward 30, 50 plus years into the future, and they're like, okay, right now, yes, we have a housing affordability crisis. 20 years in the future, will we? Maybe not. So today, should we make a decision to shape the next 50 to 100 years of our community and city and state because of a housing crisis that happens for this decade?
Yeah.
We shouldn't, right? Because what actually serves the community long term is this and this and this and this and all these mixed uses among the city. Whereas some people, if you look, again, if you get stuck in an echo chamber and you start getting tunnel vision, you're like, well, no, there's free land there. Let's just build 50,000 units.
And that's what I was going to get to, because there's also an equal problem that could come up from that case. Like if you overbuild inventory, that's what people were doing prior to 2008. It was way easy to build. Everyone thought real estate was indestructible. Let's just build a bunch of homes, flood with supply. And then who ended up, I mean, your average day-to-day person ended up carrying the bill, right?
Oh.
They got screwed.
We
people
always
got
pay it.
literally screwed in 08.
We either pay it because
And it
our
was the most
dollar-
affordable it probably had ever been
Right.
at that point. Everyone could buy a home.
Yeah.
You fogged up a mirror and you bought a home.
And you
And so
screw it up.
there
You
is-
either pay it
there
in
is
higher
definitely-
taxes, you pay it in lower value of the dollar, which we're experiencing today.
Yeah.
No
Which
matter
again,
what,
I think
the
it's
US
just manipulation in
consumer
general.
pays
Like
it.
you're going to, if you don't let it just kind of naturally work itself out, there generally is some sort of compounded effect down the road that ends up being an issue.
Yeah,
But
and the dynamics change. So today, housing is unaffordable. So it's like young families are like, no, I'll just have a small house. Like I just want a place to sleep and a place to get ready. Well, what if things get more affordable and incomes go up, which is happening? Like it's expected this year that incomes rise creating a net positive for affordability because incomes go up higher than home prices or inflation. So compound that over a decade. You look back a decade, those same buyers that were like, I just want a place to sleep my head, I'll live in a tiny home. Do they really want a tiny home later in life when life dynamics change, when economics for their household change?
Or you just making a decision based off of the uncomfortable feeling today.
Today, right. So that's where you have to, you got to zoom out a little bit. Now you also have to zoom in because otherwise you'll miss the real needs today. But you got to zoom out and be like, all right, are we overcorrecting for an issue that's isolated to this decade? And what people are looking at
We
is
just
not
have
this
to get
decade.
out of the boom and bust cycle of everything. Because
Yeah,
that's really,
brutal.
I mean, it starts at the government, but it even works down to your own household. Like you spend it when it's good and then when it's bad, you're screwed, right?
Yeah.
It's just, you have to find a way to be somewhat even keel.
Yeah, for sure. And that might be changing
Yeah.
from a societal standpoint. We may be seeing some of those shifts. I feel like the younger people are more thoughtful, more objective, more creative financially. They're more savvy financially. That's what I think. That's what I see.
Oh, I agree. Well,
I
and the
think that's
access to
changing.
technology and stuff too. Like I even think of generations like Gen X and that type of generation where it was just like, go to work and you'll get taken care of, right? You'll get a pension. You don't have to worry about taking care of yourself, right? I was having a conversation with a buddy of mine the other day about this, and it's different today.
Yeah.
We have access to information. You have to take care of yourself, and by doing that, you have to inform yourself. But we are in an age where you have the ability to do that, and I agree with you. Like I think we are turning to a better future merely just because we have more access to information to make a better decision.
And experiences. The young people experienced a lot of catastrophe financially, and that's kind of compounded with lessons being learned.
Yeah. Yeah.
So one other thing is maybe closing off with J. Powell.
Oh,
we
yeah,
mentioned it
yeah. This
earlier.
is
But if you guys haven't seen it, Kira, if we can, we should maybe just splice this into the video. If we can show the quick little 1 minute talk from J. Powell. I don't know if we legally can do that or not, but it is wild.
On Friday, the Department of Justice served the Federal Reserve with grand jury subpoenas, threatening a criminal indictment related to my testimony before the Senate Banking Committee last June. That testimony concerned in part a multi-year project to renovate historic Federal Reserve office buildings. I have deep respect for the rule of law and for accountability in our democracy. No one, certainly not the chair of the Federal Reserve, is above the law. But this unprecedented action should be seen in the broader context of the administration's threats and ongoing pressure. This new threat is not about my testimony last June or about the renovation of the Federal Reserve buildings. It is not about Congress's oversight role. The Fed, through testimony and other public disclosures, made every effort to keep Congress informed about the renovation project. Those are pretexts. The threat of criminal charges is a consequence of the Federal Reserve setting interest rates based on our best assessment of what will serve the public, rather than following the preferences of the president. This is about whether the Fed will be able to continue to set interest rates based on evidence and economic conditions, or whether instead monetary policy will be directed by political pressure or intimidation. I have served at the Federal Reserve under 4 administrations, Republicans and Democrats alike. In every case, I have carried out my duties without political fear or favor, focused solely on our mandate of price stability and maximum employment. Public service sometimes requires standing firm in the face of threats. I will continue to do the job the Senate confirmed me to do, with integrity and a commitment to serving the American people.
I haven't seen it yet.
You've got to watch it, and I hope we can post it in here. It is a legitimate, like, arm wrestle between two
A cat fight
old
between both of them?
codgers. Like, I mean, Jerome Powell is basically coming out like, Trump's trying to bully me to do something.
I'm not scared of him.
I don't believe that it's the right thing to do, and I'm standing my ground no matter what. So back up. It was almost like
he's like, this is just posturing. This is basically trying to make me look like an idiot to ultimately have presidential control on monetary policy.
right, which it wasn't designed to
So
do
is this
that.
just his last couple
it was
punches before he's out?
Maybe I don't know. It was. I mean, who knows? I don't know.
Because he's out in May regardless,
Yeah.
right?
Yeah. But he's like staking a claim, and he's calling Trump out on the carpet, and it's like,
He's basically like, I've only ever made decisions about monetary policy based on economics. I have never had any political influence.
and so the
in
question
my-
becomes: is he telling the truth, or does he just disagree with the current
I
political
know, right?
influence?
That's the thing.
Right.
You never know.
Or is Trump overstepping his bounds, and it's really getting out of control, and he's kind of like trying to shine a spotlight on an issue?
Yeah.
Either one could be true, or maybe a mix of both, right?
All of it could somewhat be true.
It is
you know?
crazy. We're living in some wild political times.
Yeah, it is interesting.
I mean, wasn't he the one saying that inflation was transitory?
Yeah. I mean, that's
that's
the
from my
challenge.
stance. It's
yeah,
like-
that's the thing. Is like, if it's economic driven and data driven, well, dude,
What
where are
data
the
were you looking at?
decisions?
So
Where
here's
are
the
we
thing:
at right now?
is
Because
Trump pissed at Jerome Powell for being so arrogant and egotistical that he refuses to listen to Trump for consideration of his opinions, which we just talked about. There's some of them that are brilliant, right? There's some of them that are questionable.
Oh, yeah.
So, like, is that where the fight's hitting? And is Jerome Powell blinded by his ego at this point? And so Trump's like, go to hell then. I'm going to just, like, knock you out with some other strategy because, like, he doesn't accept no for an answer.
Yeah.
Like, there's so many different...
Two big egos and
Reasons.
two old codgers.
Yeah,
got?
yeah. But to your point,
Yeah.
like, Jerome Powell is, I don't know, he may have accomplished a soft landing, though.
It is true, which we doubted that for a long time.
Forever. I mean, it's
yeah,
like-
that is true. On the other hand,
I don't even think
we
there's
all-
ever been a
and
soft landing.
Yeah.
I don't
we
think
may have-
I never had a percentage
One thing
of
we've got to
chance
be
in me
cautious
that we
of,
were going to be able to
and
pull
you
that
know,
off.
I don't think
No.
we're out of the woodwork yet. We just don't want to copy the 80s. We
Right.
thought we were out of the woodworks, and then inflation came roaring back. Rates spiked again. Like, are we there? Who's to say? I don't know.
Dynamics
Only
are
time will
different.
tell.
Trends looked similar. Dynamics
Mhm.
today, I think, are
Yeah.
very different.
So,
But I don't know. It was an emergency broadcast last night.
damn.
Jerome Powell got on emergency broadcast
Definitely.
and was like, dude, they're coming after me, and I'm not going to go out without swinging.
Crazy.
Crazy.
That's nuts.
Yeah.
Oh.
Cool.
Well, anyways, guys, we hope you enjoyed this. If you could, please comment. We'd love to hear your thoughts on the whole situation and where you think things are headed. And we'll catch you on the next one.
Thanks for listening to the Loans Elevated podcast. For more resources, tools, and market updates, visit loanselevated.com. Don't forget to follow and subscribe for next week's episode.